But gentlemen, thank you for joining us this morning. Far better that you introduce yourselves. Could we go along the line and say who you are, what you do, and what expertise you can bring? So, Tom, first, please.
Fantastic. Thanks so much, Tim. So I'm Tom Bull. I'm Head of FinTech Growth at EY. Wear a number of hats, really, in that regard. So I'm responsible for our relationships across the FinTech market, looking after startup and scale-up stage businesses. I run our FinTech Accelerator program, which we run twice a year, called FinTech Growth program, and I get involved in a whole range of consulting projects as well in the payments, innovation, open banking, digital asset space. So quite a wide, and I find it a very exciting remit.
Yeah.
Yeah, thanks for having us here today. I'm Richard Doherty. I head up the asset and wealth business at Publicis Sapient. Very much focused on building out AI inside the asset and wealth industry across a number of different elements. One is sort of from an operating model perspective, but also from a transformational perspective. So excited to be here today and talk innovation.
Hi everyone, I'm Keith Grose. I lead the UK for Coinbase. If you're here for FinTech Innovation, I hope you've heard of Coinbase, but if not, we're one of the world's largest crypto exchanges. We're the only player from that space in the S&P 500 with both a consumer and institutional business. So excited to be here.
Thank you. And the empty seat at the end is Ravi, who will join us. So I am going to run a sweepstake this morning, by the way, for you guys. I want to quit in the pot for how many seconds it takes for the phrase AI to be used in this forum. Chuck the money in. Panel, can we start with looking maybe ahead as far as we dare? What is in the pipeline now? What are the big game changers that we are going to see emerging either right now or in the next year, or dare I say 3? Perhaps that's too far to look ahead. To put another way, if I'm going to invest £1 million in whatever, what is the big FinTech innovation that we should be looking at? Perhaps there's loads. Tom, from your helicopter perspective, can we start with you?
Yeah, I think there is lots. I think we've got a very strong sense of excitement and anticipation about what's coming in the fintech market over the next few years. We continue to see amazing talent, amazing investment, amazing innovation within the market. We, of course, there has been, in some ways, a bit of a dip in investment levels post-pandemic boom. Some generally pretty average overall macro performance, but when you look through all of that and look at some of the new developments in the market, we think they're very exciting indeed. The regulated liability network, the initiative by 6 UK banks to issue tokenised bank deposits, announced moving into the next phase in the last couple of weeks. We find particularly exciting, and there's a focus there on a number of use cases, including marketplaces, home buying journey, particularly in relation to remortgaging, wholesale bond payments. And it really demonstrates to me that the big banks in the UK working together very effectively, working and investing hard in a really innovative, set of capabilities within the payments market. So I think that's perhaps my number one. But more widely, it's exciting to see regulation finally, kind of coming online in the buy now, pay later space. That's often changing the way we pay for things online, and that's bringing regulatory clarity. And AI. There we go. Let's throw it in there.
30 seconds.
Okay. I think we've just. I can talk a bit more about it later, but we've just done a major study on the impact of AI within the workforce, and we found that 85% of professionals are using Gen AI models at least weekly in their day-to-day work. Average productivity savings of 6 hours, reported by those folks, and increasing to 11 hours or so for the people who are really enthusiastic about using it. So I think there's real excitement and productivity in that space as well.
So we've got in this next 40 minutes cover tokenized deposits and AI. Cool. Moving on, Richard.
Really, really interesting question. I think to answer it though, we also have to take a look at the macroeconomic context that we are living in today. So over the last few years, there's been turbulence in the market, right? Turbulence across geopolitics that is playing a role into the playbook that we need to go and operate into in the future, right? So if we take a look, we've had COVID, we've had 2 wars, war in Ukraine, we have a war in the Middle East, we've had high inflation, and more recently we've had trade tariffs that have come in. And this all means that businesses today are struggling to find the route to profitability. They also are struggling from a margin perspective, and that's is making it difficult for companies to find a space to move forward. They've got legacy tech drag that's holding them back. So the question leaders are asking is like, well, how do I change this? How do I make that quantum leap, or how do I make little steps forward to move into that white space? Right, we are definitely moving. We've moved beyond analog. We obviously are in that inflection point beyond digital. We've got embedded finance. We've got blockchain in the ecosystem, and now there's the point in time where leaders need to take the step to execution from an AI perspective. And what we're seeing right now, definitely in the projects that we're running, are a real return on investment. So there's return on investment from a guideline monitoring perspective, from an investment research perspective, not just return on investment from a cost play, but it's a revenue play as well. It's a risk mitigation play. And if leaders start executing on their AI agenda today, they're going to be working in that white space, which means they're going to be able to grow. And that's where we want leaders to grow in the next sort of 3 to 5 years. And I think it's an exciting time to really start executing meaningfully to return value into a business and for customers as well.
Cool. Keith, your call.
So if I'm thinking the next 12 months, I guess I'll give 2 words I think will be massive spaces of innovation. One is stablecoins, and the second is tokenization. So if you have had your head under a rock and haven't been paying attention, it's stablecoin summer. With the Genius Act that was passed in the US, there are massive tailwinds behind this space. Last 12 months, you've seen $45 trillion in stablecoin volume. That's more than Visa and MasterCard combined, and is growing very rapidly year over year. Just crossed 250 billion to all-time high token supplies. So keep watching the stablecoin space. It is being heavily used for cross-border trade financing, cross-border payments, particularly in emerging markets. Expect to see that enter more corridors and hopefully consumer payment flows as well. And then the second word is tokenization. So we've already seen stablecoins are tokenized versions of fiat. You're already seeing tokenized money market funds, tokenized bank deposits, and I expect in the next 12 months you will also see tokenized equities, in particular tokenized US equities. And so I think it's going to be really interesting to see what happens when the world's biggest equities capital markets come on-chain. What does that open up? What does that lead to? Expect to see that in the next 12 months. And then if I'm looking 3 years ahead, I would put agentic payments on there. Volume is essentially 0 today, but if you're talking about AI and agents, you have to ask how do they interact and pay each other? Agentic payments is going to be a massive space. It's going to take more time to develop, but it's going to be really interesting to see how that space grows.
And just to pick up on that point, because I think it's a really interesting point, within sort of this environment, it's about integration, right? It's not just about integration of the tech, but it's integration of people, processes, and tech. And how do we make certain that when we move from people, we build the literacy? When we embed processes, we embed the tokenization, and then we enable the technology to be AI component driven. And if you have each of those 3 elements embedded inside the ecosystem, it leads to agentic, right? The agentic take-up, which then fast forwards us into the integration with inside mainstream financial services.
You've touched on 2 of the things. I mean, we can talk about tech and shiny AI until the cows come home, but actually, legacy systems and your people are actually 2 of the biggest issues for everyone, for many companies, or the people for every company. Legacy issues for a lot of financial institutions to overcome. How can they be overcome? I'm thinking of legacy systems. When is the day when the big financial institutions are just going to have to sweep away and start again, or is that not going to happen? Where are we with that? And talk about the effect on people.
So if I may, already right now, legacy tech AI should be embedded into your legacy tech modernization story. What we've seen with clients, and we're working with big institutions, tier one assets and wealth managers, on the legacy tech modernization journey, as we embed in our core capabilities inside the financial services ecosystem on a client basis. What we align them to do is rapidly move across mainframes, move across legacy tech into modular tech, which means they are able to They're able to get into that white space again, which allows them to be more competitive, more slim, much more fast, much more nimble, right? But I like your points around people, because there's a view out there that AI is going to come and take all our jobs. Oh my gosh, the robots are here. But that's not what we've seen. AI is definitely an augmentation vehicle. Right now, human in the loop. There's definitely people, engineers working with AI to build rapid and effective and robust systems that are then looked at and viewed and then implemented into the ecosystem. And what we're seeing is that this rapid development isn't a case of 12 months or 18 months ROI. It's 3 months. Yeah. So all of a sudden, this is why the AI train is going, because people are seeing this rapid return on investment. So I think it's an interesting world, and people's ways of working are dramatically changing as a result of that. But for a good thing rather than a negative thing.
Yeah, I'll tail on to the people's ways of working changing. I think that's the biggest thing is every leader in every company is having to make sure that people are retraining themselves to be AI first in how they approach their work. And so I'll talk about how we're seeing it at Coinbase. I think that's an example of a large company going through this transition. All of our engineers are starting every line of code they write in Cursor using AI tools first. We're also using AI in the ways that we manage internal infrastructure that's core. I think this is going to be the hardest one for legacy financial institutions to transition to. But for example, using AI to help track transaction monitoring and flag reports, right? You're using AI as core infrastructure where it can be really impactful. And then the third thing is in efficiencies with customers. How do you address customer needs? Chatbots, call centers. Are you using AI there to make it easier for customers to do the things they want to do? All of those things are changes that are happening, but I think they're leading to more efficiencies, more leverage, and I think, as you say, business ROI, and that's what we're seeing happen. And the people who are getting in front of that and retraining how to do their job from an AI-first perspective are going to do better in the future.
Yeah, I'd love to add to that as well, if possible. Yeah, on the people front, we've just published the study with the most consulting title ever called "Performance Reimagined." It's no expense spent, but there's a really good kind of analysis, including some longitudinal studies on how different AI users within the workplace are starting to adopt their behaviours. And what we found is that people who have an initial enthusiasm for AI tend to build a sense of excitement around it. Start to engage enthusiastically, and then really start to kind of that enthusiasm snowballs. They start to kind of experiment with their teams. They start to sort of play around with sort of prompts, etc., and it kind of snowballs. Whereas we found on similar programs, folks who start with an initial skepticism often struggle to break out of that skepticism. So we see, over time, kind of the kind of that initial fear or skepticism doesn't really grow. They don't move into the kind of trust and experimentation phase that those initial enthusiasts do. So we've found that there's a really important set of attributes of organizations that are able to support those skeptics to kind of break out of that initial skepticism. Is there AI fluency from leaders, and are they sort of demonstrating and role modeling that? Is there some quality training within the workplace? And we actually found that only about 50% of employees had access to training. What's the culture around kind of open teaming, sharing of prompts, and kind of encouraging best practices, etc. So we felt that we found that kind of the set of organizational attributes are just massively key to kind of supporting those skeptics to break through.
To what extent, therefore, are people who are working at the coalface, but are empowered to develop AI solutions within their team. To what extent are they driving innovation as opposed to a more strategic innovation? Are there any examples that you can possibly think of guys at the coalface actually innovating in a way that's delivering huge transformation or changes within business?
I have a great example of one that I think will be a core transformation. You have to give it time to develop. We had engineers at Coinbase develop X402. I'm sure all of you have seen an HTTP 404 code where you try and access a website that's down, you get the 404 back. 402 has actually been in the HTTP protocol since the beginning and is payment required. It's just never been used. And we built a way to use programmable money, crypto, to transact on a website. So you can have website owners, businesses, AI agents actually automate payments back and forth for micropayments using X402. And this was developed by just 2 engineers who were working on a side project. It's now become a massive foundation, partnering with Cloudflare. This is an example of when you code from an AI-first perspective. When you think AI first, you can build these really innovative tools. So I highly suggest people look at the X402 Foundation. I think that technology is going to be really important for the function of the open web over the next 5 to 10 years.
Just to bolt on to that, I mean, one of the things that I mean, listen, I've been in financial services for 20 years, and it's difficult to transform businesses. It's not a 3-month job. It's not a 6-month job. It's generally it's a bit of a journey, right? And you know, during that journey, there's fatigue, there's people that come, people go, and all of a sudden there's a bit of a blur as to why we actually here. Why did we actually start this journey? So this problem was put at our desk, our executive desk, a number of must be about 18 months ago or so, and we developed a tool called Slingshot that rapidly allows rapid development across the ecosystem, the transformation ecosystem. So no longer, and I remember the days, no longer do I have to go and speak to compliance, legal, front office to write and understand business requirements. I can actually now, we are using agents inside our transformation journey to rapidly develop requirements and take those across the SDLC and actually at the back end of it, put it into Jira and build code and then integrate into platforms. So all of a sudden, like a 3 or 6 or 12-month project becomes, you know, slightly shorter. But again, it comes back to that ROI perspective. People don't get fatigued. People are like, okay, I'm actually seeing some value for, you know, the 20 million that I'm investing here. I'm seeing early value. Let's continue. So I think, you know, that in and of itself is a game changer from a transformation perspective, because it allows businesses to actually transform. It empowers them to, you know, reduce costs from a transformation perspective, mitigate their risk, and then start really accelerating revenue. So, you know, I think there's different use cases across our ecosystem that this is amplified.
I think on the top down versus the bottom up, we're seeing kind of massive enthusiasm amongst our junior colleagues to just get on and experiment, to start using AI models, starting to develop agents, etc. And it really needs often very little encouragement to do that. But I think the thing that we need to kind of continue to focus on really is the right kinds of behaviours. You know, not just ethical ones, but also just good, you know, practices around level of review, level of scrutiny, level of original thought, and you know, often an answer from a Gen AI can look very convincing, but actually is, you know, only tells half the story. So I think building the right cultural attitudes and right behavioural sets to kind of do that most effectively is an important focus.
Yeah, I think you're 100% correct. I mean, I was sorry to jump in. I was in a recent event with the Investment Association, and it was interesting that 75% of COOs across the investment management landscape, so, you know, the guys at BlackRock, etc., you know, they were looking for guidance on how to scale AI. right, inside the organization. So there's a shift from experimentation to full-on execution. And guidance is exactly what you're alluding to. How do we put the right governance frameworks in place so we can actually move beyond the hype and execute inside our ecosystems? And I think that guidance is required so we get the true benefit out of the technology.
I just picked up on what you said about AI not only giving you half the story, so I quickly typed into my dearest friend, Mr. ChatGPT, and the key trends and innovations to watch are agentic, autonomous AI. I wish I'd done this last night. Agentic, autonomous AI in finance, embedded finance, real-time and cross-border payments. So it's covered. But I think your answers are more interesting. As we have now jumped down the rabbit hole, which is AI. Any questions from the room before I crack on with one? No. Okay. Well, look, put your hands up if you've got questions as we go along. I'll try and catch my eye. I wanted to just draw out some of the most interesting and exciting and most promising use cases that you guys are either working on or know other people are working on that you can share and maybe inspire with.
That's interesting. I'm going to go back to tokenized real-world assets.
Okay.
Yeah.
I think you're going to see market like TAMs expand significantly once you move on chain, right? Because then you're talking about access to global markets as you tokenize assets. And so we're starting to see this with money market funds in Europe. We're starting to see it with stablecoins. I think you will start to see more asset classes, bonds and equities, move on chain. And I think, again, the countries and the markets that lead from the front there are going to see their markets expand. And so I think while there are obviously risks that have to be mitigated while you're going through that process, I think that is going to have massive implications for the markets that seize on it first. And I think that is going to be a really important innovation of the next 5 years, is what happens when you take all these markets on chain where they trade 24/7, 365 globally. Mm-hmm. What does that do to these capital markets? And so I think that's one where it's happening slowly in the background right now, but it will become a snowball and it will have tremendous effects over time.
Question.
Sure. Can we just get a microphone to you, sir? Because
Sorry, shall I just say it very loudly?
My good friend Izzy, second only to ChatGPT, is running a mic across to you.
Yeah. It was bang on that point about, but how fast, right? So we've got the clash of, the crypto world with its hype factor and warp speed, old finance historically being sluggish as hell, regulators looking on top. So when does it actually go beyond, early pilots and the start of the hype curve to moderate mass market take-up?
It's a great question. I think the next 12 months are going to be critical for that, because I think it will depend on whether the Clarity Act gets passed and in what form, and what that brings to the US. The US is the biggest capital markets in the world. They're going all in on tokenization and stablecoins. When that happens, other markets will follow. And so I think it will really depend on how fast the US leans into it. And given that they have, obviously, David Sachs and a full of government policy push on this, I think it is going to happen over the next 12 months. And you're going to start to see other dominoes follow that path over time as well.
That's to the really early adopter phase, though, and then ramp up thereafter.
Exactly. It's going to be a long time before it's the size of the total equities market. But I think, again, the impact of the market size growing and market access growing is going to be very important.
So the Genius Act and all the ramifications thereof places America well at the forefront of tokenization and stablecoin use. What does that say for the rest of the market, say here in continental Europe and Gulf states? Are we left behind?
I think that depends on, one, how fast we move and in what form, right? So we are actively, we being the UK, working on stablecoin regulation now at both the FCA and the Bank of England. That's in draft form and consultation form today. It should be out by the end of this year and enforced by the end of 2026. If you get that right, you have a second mover advantage where you make it a more friendly place for stablecoins to come. If you get that wrong or you take too long, that innovation is not that it doesn't happen, it just doesn't happen here. It goes offshore to other markets that are being more friendly or that have a clear regulatory framework in place already. So you have MiCA in Europe, which was the first sort of big regulatory framework around crypto, but it definitely has its rough edges and pain points. You have the Clarity Act driving stablecoins in the US, the Genius Act, the Clarity Act for market structures in the US that should be out by the end of this year. And so the UK really needs to move quickly, but it also needs to be smart, because if you force everything into sandboxes, you take your time, you don't allow people to hold above 10,000 pounds of stablecoins, I think those are bad regulatory approaches that will just drive innovation offshore. And so I think this is one world where you have to think of, if you're talking about finance at the scale of the internet, which is what programmable money is all about, you are in a geopolitical competition. Innovation will just move to wherever it can find clear regulatory frameworks and let businesses operate and grow. We have to be clear about that in the UK and seize that opportunity, and it's a critical 12 months for that.
On pace of adoption, our latest analysis is that 13% of our FI and corporate clients combined are already using stablecoins, but 54% anticipate doing so within the next 12 months or so. So the pace of kind of adoption within that segment is we see as very, very rapid, especially if folks do go and follow through on what they've said they will do. And really, I think often what's driving that is cross-border. So particularly, making cross-border payments. To suppliers. There are other use cases in sort of the treasury space, etc. But it's that kind of 24/7, very cost-effective cross-border capability that we currently see really kind of driving that market. And look, what makes us really excited is the kind of beyond the 365 capabilities, the kind of programmable nature of payments in the future, as we start to see clients be able to put conditionality on payments, have those payments automated. When, for example, a supplier makes a delivery, the payment's automated. More sophisticated digital forms of escrow to kind of help participants manage payments in kind of complex situations. Exciting for us. Tax payments, potentially, automatically getting made as part of a transaction flow. So nothing gets the accounting community probably more excited than some of those kind of developments. So I think there's kind of adoption already there in that segment, but a massive wave to come if our kind of clients go through and kind of realise those expectations in the next 12 months or so.
You mentioned the need for the US, for the UK to move quickly, which I thought was a bit of an oxymoron strategically. But what is? Can you look even further ahead? Then let's deal with stablecoin. Looking even further ahead, what are the maximum implications? I mean, outside Keith, I was kicking the can down the road of whether they'll take over fiat currency. I don't know, where do you see them ultimately going? Can we expand on that?
I think the way I'd frame it is, I think it's more interesting to think about this as wallets versus accounts. I think you'll start to see wallets sit alongside the concept of a bank account in many fintech applications and financial institution applications. And then I think users will start to use these products interchangeably. And just like open banking, you didn't need to know that as a consumer to move money from your Monzo to your Revolut. You will be able to use stablecoins without realizing it, because you will have a wallet that's holding stablecoins that's on-chain, accessible from within your traditional financial applications. And so I think the demand is there and the technology is catching up at this point. And where I think you'll start to see that flip is when you start to see folks like the CMA9 launching their own ability to trade and hold stablecoins inside their applications. And I do think that is coming within the next 24 months. I think you will see one of the major UK banks launch the ability to trade crypto and hold stablecoins. And so then it becomes something where just familiarity builds over time and you start to take over volume. That's on the consumer side. But where it's already showing volume is on the institutional side, right? Cross-border payments, trade financing. If you're managing if you're Nestle and you have to manage your treasury across 20 different currencies, stablecoins actually have a lot of value there. Yeah. And it's a much faster way for you to settle and manage your treasury. That is actually where you see players like BVNK and others growing very rapidly. And so you're seeing this adoption grow on both sides. But that's the thing I would keep an eye out, and where I think this is going in the long run is you'll have wallets sit alongside accounts, and people will just get used to that and treat it interchangeably.
And it's also about making certain that this ecosystem is integratable across as you mentioned earlier, across people, processes, and technology. Because if we don't put the guardrails and the foundations in for it to scale, then it's going to be difficult for anything to happen outside of what we're talking about, right? So I think laying the foundations for innovation from an agentic perspective, as you mentioned earlier, is also critical, right? As we move forward and innovate inside the stablecoin environment.
And just on the UK, I mean, I think easy to say. It feels like the getting things done quickly feels challenging. I mean, look at the last decade, though, in fintech. It's been the most phenomenal growth story.
Sure.
Amazing levels of investment, typically second only to the US. Phenomenal talent. Amazing developments like open banking and open finance, really pioneered here in the UK and now exported globally. Amazing businesses, in the digital banking market, et cetera, et cetera. So. I kind of feel like in the last few years, largely as a result of some of our politics, a lot of policy work's been slower than perhaps it could have been. I think our track record in fintech, in the broadest sense, is pretty good. And if we can kind of reclaim some of that momentum, the opportunity here is massive.
Thank you for defending the UK.
I would agree with that. I would agree with that as well. And it's not like these regulations haven't been in work for the past few years, right? We're seeing them come out now. The FCA and Bank of England and others have been working on these for 2 or 3 years. And so we are making progress. And I do think the UK has the opportunity to seize this space. We just have to make sure that we do it over the next 12 months and that we do it right.
And the FCA is definitely their posture is changing.
Agreed.
To more, it's got a growth mindset now rather than a slightly different mindset where it used to have. So inside the ecosystem, they are really prodding us along to innovate and figure out how we can innovate together. I mean, I think we are we are running an incubator with PIMFA. PIMFA is an investment association it sits inside the wealth and asset management space. And we take in companies from ideation all the way to execution from an AI perspective. But sitting alongside that, we also work with inside the FCA sandbox to develop different types of prototypes so people can actually, customers and companies can actually see, touch and feel what the innovation actually looks like. And it's absolutely amazing that the FCA are sitting alongside us, because if the FCA sits alongside us and drives the innovation, then the market takes it up. To your point earlier on, it allows the executives to get the comfort that this is actually something that can be embedded into the ecosystem quite naturally, rather than something that's forced.
There's a question over there, but which we'll take next, please. Is he right at the back? And I'd like to. A couple of things popped into my mind, which were mentioned, which maybe we can pick up on afterwards, which is about whether one stablecoin will emerge top dog and how long it will take, almost a global wide currency, and talking about whether or how soon it will actually be a mass market thing. So I'm spending my stable coin in Tesco's and other supermarkets are available. I don't know, those thoughts interest me. But sir, you had a question.
Do you want it now or after you?
No, please fire away now.
Okay.
Much more important than my questions.
Let's not compare. It is though. How fictitious do you guys think that the whole forward environment will be to the adoption of some of the things you've been talking about, as in fear of the consumer, the general Joe public investing in something or indeed buying something, and then all of a sudden it's financing some organisation that's going to do something wrong with it? Obviously, there's been a huge amount of progress done in the traditional banking space, but how do we think that's going to actually move over to the stablecoin crypto world? And do you think that's going to block things happening more quickly as consumers and regulators take that into consideration?
I think the short answer is no, because I think getting trust and compliance right is what's going to grow this space. Exactly. And that's exactly why these frameworks are being put in place, and you have to get licenses to do certain activities. And I think that is the right way to approach it, right? If you own the front doors to this space as a regulator and you make sure the bar is high there, you can actually prevent fraud, you can do the right uplifts. And I think more and more large crypto stablecoin issuers, crypto exchanges are going to look and be regulated like financial institutions for that reason. And we're on that journey today, But I think starting from a place of trust and compliance is key, because as you say, as trust gets eroded, users won't move to those solutions. So I think it's a key part of making it successful, and any business has to have that as part of their strategy.
I think what often drives adoption as well is new businesses really looking at what are the current pain points in the market. So to point on, paying for my groceries in XYZ supermarket, I don't really see a significant pain point there at present. And therefore that might not be the first place that folks entrepreneurially looking to deploy these new solutions might look to target. Whereas making a cross-border payment, for example, might be kind of costly, more administratively burdensome. So if there's a simpler, quicker, more cost-effective, more real-time way of doing that, then that's a really compelling proposition. And often solving that pain point isn't enough anyway. It's about raising the awareness so that a critical mass of customers are aware enough of the topic, and then even that often isn't enough. There's what's the hook that gets people doing it for the first time, and when you get those three factors, the sort of solving a real pain point, getting the awareness up, and having a switching hook that gets people doing it for the first time. When that all comes together, then we get a mass kind of wave of adoption, in my experience. Yeah.
So kick my proposition into touch or develop it as you see fit. Does stablecoin, for the first time, actually represent a global mass market currency of its own, or is it simply best in the institutional space?
Short answer is yes, but it has that fit best in markets where the traditional fiat currency is being challenged.
Yep.
Right? Is why you're seeing adoption of stablecoins in places like Argentina. Yep. Those type of markets, but I think it will enter other markets as well. I think the better question in my mind is, a stablecoin is just an on-chain representation of a fiat currency. What fiat currency matters? Because right now, if you're talking about 250 billion in stablecoin volume currently, of that 250 billion, 99% of it is backed by US dollars or US dollar assets. You have 500 million about in euros, and you have 500,000 in pounds. So this is about what is the role of the pound on the global stage, given the rate of growth you're seeing in stablecoins. I think it's really important, and you shouldn't think of it at the issuer stage. You should think of it at the currency stage. What high-quality liquid assets are backing these stablecoins, and what currency are those assets, and what central bank are they backed by? And right now, it's almost all US dollars backed by US treasuries. And I think it's going to be really important to figure out, does that develop into more currencies? If not, you're sort of continuing and driving forward a dollar hegemony, and I think that's a really important question that regulators are thinking through right now.
We were talking about that on this stage yesterday, so we're going to go down a little rabbit hole. I do apologise. There's all sorts of ramifications about whether the world actually wants the US dollar as its global currency anymore, and whether that will continue. So that's a huge point, isn't it? And stablecoin and other tokenized deposits haven't been tested yet by real recession or depression. And if US Treasuries go haywire, then what trust have I got as Chief Financial Officer at Nestle in stablecoin? I mean, are those issues yet to grapple with?
I think those are fair questions. I think the answer to the second one is, if US Treasuries go haywire, there's a lot more problems in the financial system than just stablecoin. So I don't think that necessarily is the way to frame it. But I do think it's early on in this journey. And I think the way to think about it from first principles is, you need money that works at the scale of the internet in this world we're moving towards. We talked about AI. This can be even more true in the era of payments, agentic payments. And so you need programmable money. The best form of programmable money, in fact, the only form of programmable money right now, is crypto using the blockchain. And whether it's stable coins or other cryptocurrencies, I think you're going to see those play a huge role going forward. And then the question becomes, what currencies, what issuers, what use cases take off? But I think from a first principles perspective, that's the tailwinds behind this space.
Yeah. Okay, so there's things we're not going to be able to touch on adequately are things like fraud and identity scams, because you mentioned right at the beginning tokenized bank deposits, which we haven't actually discussed and dealt with. The UK is running a very exciting experiment which ends in 26, doesn't it? Where does the UK, sorry, just because we're sitting in London, where does the UK sit in that respect with the rest of the world? And how are tokenized bank deposits going to really make an impact and transform matters for my life or institutional life?
I think it's not unique. There's a similar initiative under the regulated network liability banner in the US. There's also a project called Agora under the auspices of the Bank of International Settlements, looking to develop the concept across a number of markets. Clearly, there's a significant attraction in a tokenized ecosystem that relies on regulated money. So working with banks and instruments issued by banks under the capital regimes, governance mechanisms, conduct mechanisms that are already established within the banking sector. So I would see that as one component of what's evolving to be an exciting future of money that has a number of kind of runners and riders kind of emerging. Obviously, stablecoins the most sort of tangible and widely adopted at present, but with banks through those tokenization initiatives looking to get in on the action of bringing some similar capability with the benefits of being a kind of bank instrument. So as I said earlier, I think it's good to see the UK banks, particularly 6 of the major ones, announced in late September as the pilot study, which runs until 2026. And we'll see real money move across those new banking rails. So I think a kind of an exciting development, and one in which often particularly the UK banks have pulled back from a number of kind of payments areas in the last few years. Notably the sort of payment acceptance or acquiring market. So I am pleased to see that kind of reinvestment and kind of innovation go forward.
And I suppose because those assets still remain regulated under existing banking regulations, it gives a degree of confidence, doesn't it, to either the consumer or an institutional consumer.
Exactly so.
Does it? What sort of game changer is that for us? Is that in the top 3? Do we decide?
Well, I think for my world, it probably is, but I don't know if you put it financial services overall, whether it will be one. I think the bigger question is, are consumers or institutions going to care about whether they're dealing with a stablecoin or a tokenized bank deposit? It's very nuanced, and it has to do with the backing instrument, right? But I think it has an important implication for which of those takes off and where. And I think, again, you also will have CBDCs from some markets, right? The euro is trying to build a euro-backed central bank digital currency. And so all 3 of those will be competing for the same thing, which is an on-chain version of a fiat currency.
Yeah. Sorry, I shouldn't interrupt, but do you think CBDCs actually have a future?
I think they will be developing too slow. And so I think there is always an important role for central bank money to play, right? But the question is, by the time a CBDC goes through all the development, is released, gets any adoption, has the market already gone somewhere else? And I think that is a fair question to ask, because I do think private industry globally is moving much faster than things like the ECB around a CBDC for the euro.
Okay, look, in the 53 seconds we've got left, with £1 million that I have got to invest, where do I invest it? Where would you spend my money so that in 3 years' time I'm crowing here on stage?
Well, I think you need a lot more than $1 million to crow.
Yeah. Okay.
Okay. So if it's quite interesting. It's a big question, but look at the challenges that we face in geopolitical challenges that we've already gone through. The AI train is happening. We've seen today Nvidia investing into XAI, $2 billion, and that train is moving fast. The US against China, Europe's trying to find its place in there. And I think quite interestingly, actually, what's happening in OpenAI is quite interesting for fintech. So they're going out and they're buying and they're acquiring small fintech companies, and it seems like they're building an orchestration payments layer inside the ecosystem. So, if smart money is take a look at where the AI train's going and invest in there. And actually, I say this, I mean, I do this with my 9-year-old and 11-year-old on a weekly basis. We look at our watch list and we take a look at different stocks and different things that are happening. And all of the stocks, the Nvidia stocks, the Tesla stocks, etc., all sort of bounding up. So, I think now's the time to execute, but also from your perspective and others' perspective, also invest, because now's the time to catch the wave.
Keith and Tom, you've got about 10 seconds each to wrap up.
Well, I think I can say if you believe in stablecoins and tokenization, Coinbase is probably about as good of an investment as you can do around that space. But
That's shameless.
shameless. But I would say around the AI space, like just think about where the big companies are going. I think the big question here is going to be, does the Mag 7 continue to win in these spaces, or large financial institutions, or will there be disruption from the startups that are growing so rapidly? And I think that's an unanswered question. And I think if you're going to place bets, placing bets on one of those two outcomes is an interesting decision to make personally.
Thank you, Tom.
I'll probably just bring it back to customers as well. I think the state of the UK with regard to the access of the general public to make their investment rather than put their million into the bank is kind of lamentable, and therefore initiatives that can open up that kind of retail investment space, and very much welcome the FCA's latest developments around simplified advice, etc. So I think things that support that access for us all to invest our £1 million would be very welcome as well.
Great. Excellent. Panel, it's been a brilliant discussion. I've so enjoyed going down these various rabbit holes at great pace. I noticed that at 12:40 we've got a fireside here on this stage on the future of money. So perhaps that broad-ranging topic will take our conversations a little bit further. The next event on here is a keynote from M-Cube on driving the mortgage revolution. So maybe we'll talk about tokenized bank deposits in that. But it's a networking break now, and we're back on stage here at 12:15. But panel, it's been absolutely brilliant. Thank you for guiding us through the future of FinTech.
Thank you.
Thank you for having us.